Fed is set to raise interest rates again today, increasing it a quarter point from 4.75 to 5%. Americans have experienced a 0 to 4% hike since March 2022, and many economic experts are wondering what another surge could do to the financial sector amid this banking crisis.
As banking expert Jim Bianco pointed out in a thread of charts on his Twitter page, bank deposits were decreasing leading up to the Silicon Valley Bank failure. As you can see, this is just a few weeks before the SVB crisis, and this is 2 days before here. The bank run continued, plummeting deposits even further. Bianco makes the case that any Fed increase will force regional banks to bleed deposits, risking a contraction crisis. So yeah, one of these arguments, and it's difficult because the politics of this are a little all over the place. There have been unexpected allies.
They're blessedly all over the place, frankly.
Yeah, so I mean, there are people who say, you know, a bailout of the rich is par for the course. It shouldn't be done. Taxpayers shouldn't be doing these bailouts. But there are some who are sympathetic to that view, but who are also just slightly wary of what it would mean for there to be a crisis of confidence in some of the smaller banks in the country, and whether or not that would cause there to be contraction, whether or not we would end up with just a handful of banks that were then too big to fail and then necessitated more urgently a bailout whenever there's any kind of crisis.
Right. I mean, we would have been in better shape if we had let them fail the first time all those years ago. I think the kind of one of the libertarian or the Austrian economic perspective on these kinds of things is that once you've gotten to the point where where people are saying government has to swoop in and rescue, like the pain has already happened. The suffering, the binge drinking already took place. Now you have to have the hangover. You can delay the hangover by drinking more, but you're gonna have to feel that at some point. So we're hurting ourselves. We got to get right, and you got to let the hangover happen, and that will ultimately be in everyone's long-term betterment.
Well, yeah, and I think the question is also who is hurting. Whereas I think there was much more sympathy for the idea of protecting depositors, and certainly we have a kind of national consensus about protecting depositors up to $250,000. I think most people, were very happy to see the bank itself go down. Right, but then the question becomes, now why are we in this conversation about upping the cap on the FDIC insured deposits such that increasingly people who have huge amounts of money in the bank, over $250,000, millions of dollars in the bank, like a lot of these Silicon Valley guys did and people did, why is it that they now get federally backed guarantees simply because they're the ones that were in crisis? What about all of the rest of the people? What about renters? What about people with credit card debt? What about all kinds of other people with student loan debt, et cetera, who have no similar guarantees that the government is going to swoop in and bail them out when they're in crisis?
Right. They should pay for insurance.
Right.
For, it can be, insurance can be whatever, but nobody should get more protection than whatever they're owed based on the insurance payments they're making.
And in fact, they've been resisting doing exactly that.
Yeah. With that, then that's fine. And I would say that's fine, but then you have to let the depositors fail beyond what they're paying for. That's just how it has to work. So this doesn't make any sense that they came in and said, well, we'll just cover everybody anyway. If you want a system where everyone's covered for everything anyway, then make them pay the insurance.
Right.
Yeah. Or else it's unfair to people who are not, hoarding their money in these banks or who are, using financial services in some other way, like you said.
And moreover, the very people, I'm sorry, there's an asymmetry in the kind of interventions that are being done now. So the government is expected to cover depositors, even people who are in no way mom and shop, small business owners, but these big Silicon Valley tycoons who invested in this bank, used this bank because it conferred certain benefits that they were able to take, but now we're socializing the risk. Okay. Additionally, they were often pushing for the exact kind of deregulation that set them up for this crisis. They would have, had there been the pre-Dodd-Frank or pre-deregulation of Dodd-Frank under Trump rules in place, requirements to do the exact kind of stress testing of what would happen if you had invested in these long-term bonds and interest rates goes up. The exact kind of stress testing would have been required of a bank of this size, but for that deregulation, which is why some people were a little irritated by an appearance Barney Frank made on the New York Times' daily podcast show, The Daily with Michael Barbaro this morning, in which he took no responsibility for leaving Congress, advocating for deregulating his own Dodd-Frank legislation, and then going to work at one of the banks that he was previously regulating. He says that he thinks there's no relationship between the deregulation and what ended up happening,
right,
and justifies participating in that kind of revolving door politics by saying explicitly, I went to Harvard Law and could have gotten a higher salary if I never joined politics, so I'm basically entitled to get a $300,000 plus salary.
He said from his perspective that Signature Bank was perfectly financially healthy.
Right.
They should not have closed it. He said it was political punishment for the bank being heavily leveraged in the crypto space.
Correct.
So he sounds a little bit like he's actually making the defense Sam Bankman-Fried was making.
And
honestly.
I don't know that that's a comparison that speaks well of anybody in this particular moment. I mean, the polls overwhelmingly show that Americans of all political stripes don't believe that the taxpayers should have to bail out the financial industry when they make a bad bet. At the end of the day, there was no unknown in this scenario. They knew that their deposits were only insured up to $250,000. They knew that they were at risk. And other people who are more savvy investors, they either spread their money around, keep it in smaller amounts in multiple banks, or invest it elsewhere. And now, I'm sorry, over and over again, we see this scenario where we're told that people have to deal with the consequences of the bargains that they strike when you're anybody except for venture capitalists.
Yeah, well, they should too.
Yeah.
They absolutely should too. And they're coming in for a lot of criticism because this is rank hypocrisy. It really is rank hypocrisy, and it's going to make you, if that's the standpoint you're articulating, you're going to end up sounding less credible every other time you're warning about bailouts and such things. Right. It has to be for everybody.
Speaking of institutional credibility, Treasury Secretary Janet Yellen had this to say about the state of the economy this week.
And take an economy that is performing very well. We've had the fastest recovery from a downturn that we've ever seen, and the fastest recovery of any nation around the globe. The unemployment rate is near a 50-year low. The economy is doing well, and it would threaten all of that.
Now, is this out of touch, or can you just not win in these situations? Is it always
Both.
a loser politically?
Both, absolutely both.
Is it possible to say anything good about the economy without being perceived as not being attendant to the still urgent needs of the population?
Sure. I mean, you never want to be playing defense on the economy issue. People have to have a general perception that the economy is doing well, which sometimes they do. They don't have that right now.
Yeah.
Because everything costs a lot of money.
They're raising interest rates.
It costs a whole lot of money.
Yeah.
So, I mean, realistically, there's not a lot she can do to make it sound like, to put lipstick on a pig or whatever.
Yeah.
I mean, there are good things about the economy. The employment levels have been decent.
But then you have people like Larry Summers literally arguing that we need to fix that problem. They're advocating for child labor to loosen up the labor market. They're advocating for higher unemployment rates. They want to drive up interest rates so that employers have more incentive to fire employees. That's exactly what the economy demands, because again, the cure always requires the poor and working classes to pay, and never asks the elite to get a bailout to be the ones that are responsible at all for the kind of spending that's inflationary, or, as you always point out, military spending.
Yeah, let's cut some of that. No more bailouts. It can't be heads I win, tails you lose.
Yeah.
Shouldn't be that way. We'll have more Rising after this.